Good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening, as we're here now on Tuesday, and this is the 29th of April, 2025, 6:45 p.m. Central Time. Well, tomorrow marks the 100th day of the Trump parade. I will call it that because it's very interesting. Now, we get a lot of news tomorrow, so let's take a look first at that. Mortgage Bankers Association numbers at 6 in the morning, ADP private sector jobs. And by the way, I'm not giving you here what the estimates are, what we think. I do that in my written updates for those of you that are subscribers to that. So it's just not what we do there. And I do put it out in my morning subscriber videos as well, well before the markets generally open with these. ADP will come out, as I just said, with their jobs change. First quarter employment cost index, that's at 730. So you got a whole host, including the first look at the first quarter GDP at 730, personal income spending and the PCE price index. So you don't want to be trading at 730 because the markets are going to get with the algorithms all over the board. So I just give you fair warning on that. You'll then get your break where you can come in because then we wait on the Chicago PMI index at 845, the National Association of Realtors, the March U.S. pending home sales. That'll be important at 9 in the morning. And the API numbers will come out at 9:30 a.m. But the elephant in the room today was Harvey Lutknik when he said that a deal has been made. He can't tell you with who. The country has to give permission to the Trump administration to announce it. And the markets at that point, the stock indices took off to the upside. They were actually breaking down at that point, and they reversed course. I still feel that the metal markets are trying to work lower. I've made the mention of you why, and my thought process is run along the idea that you lost bullish momentum. So before we go any further, because I can cover the rest of the charts in the financial update, let's go right to these and take a look at what you've got. When you look at a weekly chart of gold, it's up 1.3% now, $42 for the week. That's not bad. You can see, remember I told you the market's in a consolidation phase. It's trying to figure out what to do. Think of a triangle. You can draw the top part there. You can see almost the bottom part coming in here. As you move into the apex, the market generally tries to move one way or the other. Can you get false moves? You could, but that's probably the pattern this market trying to work out of. Should the market break out to the downside, it would do so by getting under 3278. That probably takes you back to the 18-day average of closes where the market regroups. If the market breaks out to the upside, well, then the 3,500 level becomes another important area, possibly for a retest. What I see in the market right now is divergence. Momentum is pointing down. The market has upside bias because it's over the 18-day average. But when you lose this bullish momentum, often prices try to get closer than they have to the 18-day average than what we're seeing. That's all I can tell you. In the gold-silver ratio, it's colored silver now by me because the market has broken back from the 105 area to now prices are under the 18-day average of 149 at 122. When we take a look at the silver market, you have a pattern here where the market's got lower highs and higher lows, a very difficult pattern to trade off of. In the copper market, you stuck your head up today for the highest high, and now you're breaking back down. Another one of these that so many of these markets have come off these lows and use a lot of that power to come from this April 7th through 9th period all the way up here that they're almost begging. How do I take a break for a little while? You're seeing that in the gold market, in fact. In the platinum, this market had gotten up and over both the 200-day average in gray, the 100 and the 18, and it's sort of stalling right here. If it can continue on, and that's the big if, then look for the 10-13-50 area. But it's paying attention to the resistance numbers. If it breaks back down, 957.70 is a potential target. Very difficult for me to tell my clients to step in and buy markets that are this overbought and have come up like that, and do they have any verve left in them to get to the next level? In the dollar index, should the market start taking out 98.67, I'd get concerned. Yes, the market is oversold. Yes, it lost a bearish reading and it normally gets up to that level, but you then probably start looking at taking out this low, and if that happens, you're right off getting to the 18-day average and you start talking the 9,700 level. It really should not break down any further, I think, if it's going to be in good stead. Now, one of the things you want to do is take advantage of all that we're writing right now. The Linn and Associates report, my twice daily newsletters, Monday through Thursday. I'm covering all these details that are coming out, and it is a fast changing landscape. They're even talking now of changing how the chip tiers work from the U.S. to sending to certain countries. Now, President Trump is thinking he wants to take control of that for trade negotiations, do away with the tiers. I'll talk more about that in my newsletters and so on. In the meantime, to get our free offers, to get a trial to everything, go to iraepstein.com, free offers. There'll be an icon up here. Give it a click and away you go. I'm Ira. I'll catch up with you all at the next updates tonight and or first thing in the morning. You have a good evening.